Awesome. Hello, everyone. Welcome. Thank you for joining us. We have about, 40 people on right now. Today, we're doing session 7. This is almost like a bonus session for the home run on our real estate investing series. I'm not going to spend a lot of time talking about myself because you can see that in the previous sessions. But I am a product manager here at Beeline, mostly working on all the technology that powers our lending products. Today, I have a very special guest, Danaus from Awning, co-founder and president of Awning. I'm going to give him a couple of minutes to introduce himself. But before I do that, I want to cover 2 things. One, takeaways for today. We'll be talking about short-term rentals. So how do you find high-return short-term rental properties? What are the current trends and what to expect for 2023? What are some common mistakes of short-term rental investing and how to avoid them? And then how to partner with local teams to acquire, rehab, and operate a property. Last but not least, some housekeeping. The content of this presentation and any other broadcasting or recording is for informational purposes only and does not constitute financial, legal, or mortgage advice. And I'll let you read all of that on your own. So with that, let's roll. Danaus, welcome.
All right. Thanks for having me, Jonathan.
Yeah, I'm super excited. So why don't we start off with a quick introduction? Why don't you tell the audience all about yourself? Tell us why you started Awning, how you got into real estate, and where you are now in your journey.
Yeah, happy to do that. So again, I'm Danaus Chang. I'm one of the co-founders of Awning. By the way, I've got multiple screens, so I keep having to look for my camera. But I'm one of the co-founders of Awning.com. We are a real estate technology platform that helps individuals find, analyze, purchase, and even manage their short-term and long-term rental properties. As far as my background goes, I was born and raised in Dallas-Fort Worth, Texas. I'm actually living there right now, although, and I'll tell you in a little bit, I've lived in different parts of the country. But got some pretty humble beginnings. I'm of Chinese heritage, and my parents immigrated to Dallas-Fort Worth, Texas in the 70s, and they were working as teachers. My mom was actually at a daycare, and they had the big American dream, and their American dream involved owning real estate. So after saving, and I actually just checked with my mom last night, I was trying to understand how much they paid, and it surprised me. After saving about $10,000, they had enough to put down a down payment on a 2-bedroom house. And my parents were notorious for being really thrifty. And after a few years of savings, after buying that first house, they saw a larger house going down the street for sale. And they took their savings, additional savings, and they ended up purchasing that other property. But the thing is, rather than selling their first property, they ended up turning it into a rental. They actually caught the bug and saw that this was a really great opportunity to make some income, but also hopefully try to build some wealth. So they continue to do the typical wash, rinse, repeat. And, I ended up actually growing up, moving every couple of years because they would buy a property and then I and the rest of the family, we'd all move into that next property while the other one becomes the rental property. And so, I grew up around that all the way to the point where when I was younger, I was mowing the rental property lawns. I was helping my dad put up fences, a lot of the DIY stuff. I ended up going to college at the University of Texas in Austin, studied finance. And when I graduated, I went into the business world, worked for Deloitte Consulting and got into more of the business track. But on the side, growing up around a real estate family, I was really set on trying to figure out how to buy my first house. So I was able to do that as soon as I graduated from college, not because I was making a lot of money, but because I figured out a way to hack my way. And I think the term today is house hacking, which is more popular. But I ended up actually purchasing a 4-bedroom house in Austin. And back in the days, it was not the way it is today, but it was a lot less expensive. But I was able to scrounge together some type of savings and pull one of my bonuses that I got to be able to purchase a 4-bedroom house in Austin. And then I was able to basically afford it because I recruited 3 other college roommates to go, basically help me pay my mortgage. And so it was a great win-win. They got a really chill, laid-back friend as their landlord. But for me, I was able to get my mortgage covered. Since then, my career has evolved. I've helped scale 3 different tech companies from the startup stage to exit, all while growing my own real estate portfolio to about a 6-figure passive income number. And then, fast forward to a few years ago, I was working with my co-founders and today Shri, discussing my real estate journey and talking about some of the frustrations with how time consuming it is to find and buy rental properties. And, I think I was coming off of a really bad experience with one of the agents I was working with from one of my own searches. And we started jamming on these problems and saw that there could be a bigger opportunity for us to focus on single family rental properties. So that's how the idea of Awning.com was born today. That's a little bit
awesome.
of my background, though.
That's awesome. Love that story. So is your entire portfolio residential, or are you doing any commercial properties as well?
No commercial. I've got a mix, primarily single family. That's what my family's bread and butter started with, just single family residential houses, standalone. That's what I started off with. I ended up having a few opportunities to purchase some duplex, triplex, fourplex types of houses. So I've got a couple of different fourplexes as well. But other than that, it's mainly single family and a few multi-units.
Awesome. I gotta ask, out of all the DIY things you've done, what's your least favorite?
Oh, the least favorite. Oh God. I think I like to pretend I'm this really handy person, but let's just say this. The better technology has gotten and the better access to information, aka YouTube, the easier it's been to be able to solve some problems. But also, it's like I'm getting older and I'm getting busier, and I just don't want to deal with any of those types of things. So, if it's like a small little thing where I happen to be self-managing or in a certain situation where I can kind of help, I'll do that. But honestly, like most issues from the DIY side, I don't really love to do. So I actually leverage property management pretty heavily. But also, there's certain kind of trophy assets that if I happen to be living in that area at that time, that I'll probably get my hands a little bit dirty.
Gotcha. That makes sense. I got to ask what you consider a trophy asset.
Oh man, basically, there's all these different definitions out there. It's basically a property that I'm like proud of and one that I might tell a little bit of a story around. And it's kind of fun to talk about STR because that's the example that you want to talk about typically because they're mostly in attractive areas to be in. So I do have some properties that are kind of in the suburbs, a little cookie cutter, not that interesting, not that sexy, but I happen to have a property in the Bay Area that I was able to convert into more of a short-term rental type of situation. And, because of the location, because of its access and just being in the Bay Area, it makes it a lot more interesting. But I think the bigger part is I really like talking about a property in an area that I want to be a part of or be in. And so just being in the Bay Area, and I lived in the Bay Area for a number of years before I moved back to DFW. But I like talking about that property because, especially in the short-term rentals type of environment, when that property is not occupied, it gives me an opportunity to actually use that property. So, I think, talking about some of these properties in better areas, sometimes I talk about, my properties in Austin, and I'm pretty proud of that, but I was not so proud of it, 7 years ago, 8 years ago, when there actually were some challenges with a few of those properties. But now it's one of those things as the market increased and the market became a lot hotter, specifically Austin. It's one of those properties that I consider something I'm pretty proud of.
Gotcha. That's awesome. So speaking of STR, I do have a question for the audience, and I'm gonna put it on the screen right now, just to get an idea of where everyone is in their journey. If everybody could please just answer the poll, I think it's gonna be on the right side. And then while that goes on, we are taking questions. If you click on the Q&A tab, you can submit your questions there, and then we'll answer them as we go. As we cover those topics, we'll go through the questions. But then, why don't we start talking about, you mentioned STR. Why do people get into short-term rentals versus long-term rentals or other types of real estate investing? You mentioned a little bit of your story, but from your angle, why are there other people doing that?
Yeah, so I actually personally got into it right around COVID. Like I said, my family grew up in real estate. I actually have two older sisters. One of them has some commercial real estate. My other sister is someone who got into the short-term rental. Gosh, it might have been like 8 or 9 years ago before this became even more popular. And at least for me, when I started thinking about short-term rental, I saw this as, hey, this is just a great opportunity to get some good yield, but it's also a fun property. But if I apply it to what we've seen at Awning, when we first started, we focused on using data and technology basically to help investors find and buy the best long-term rental properties. But it wasn't until the middle of COVID that short-term rental demand just really started taking off. And I think we can dig more into this. But to answer your question, we had a bunch of people reaching out and asking if we had comparable data. So what we did was we decided to speak to a big group of our top customers about the demand for short-term rental. And then we also even spoke to like 100 different real estate investors who were interested in short-term rental. And some of the top things that we heard from them is that, basically short-term rental can be a little bit scary. It's a little bit complicated, but it's really, really interesting to them because they like the fact that in certain markets and certain areas, the returns are just a whole lot higher. But we also found that people wanted to have more fun with their properties. I alluded to this with the term trophy asset, but something very similar to that is just a property that somebody could make money off of, but also potentially even use on their own. And that whole thing became a lot more popular during COVID. But we also started to see just increasing returns happening with that. So, there's a bigger story that we can get into about the impact of COVID on it. But overall, I think it's a combination of just higher returns in the right types of markets, but also a property that is really fun to own and something that people are really proud about.
Gotcha, that makes sense. When I think about investments, whether that's real estate or really anything else, I like to think of who's investing in this type of asset. Just curious from your lens, as president of Awning, if you have an idea, if there's almost like I want to say stereotype, more like a demographic that's more likely to invest in short-term rentals.
It's a mix. I'm just thinking about the customers we have right now, the clients we work with. It's individuals, it's couples looking to build a nest egg. It's folks that are interested in just parking their money in something real and tangible. But if I was kind of forced to it, we do a bunch of this segmentation when it comes to really understanding the customer journey. We found ourselves working with two main groups. There's typically like a less experienced investor group who wants to own something that's fun, but also just kind of dip their toes into real estate. And at that point, they don't know what they don't know. And so they're just kind of interested in learning and hearing about all the different options. And then when we talk about short-term rental, it's just got a lot of great things associated with the value props. It's fun, it's interesting, you could potentially use it, and the returns can be very, very high. On the other side, we work with a good amount of experienced long-term rental investors. But one thing we've seen over the past year or so is a lot of these folks have been hearing about short-term rental, but they're also looking to diversify. and try to increase their returns. And we can talk a little bit about metrics such as cap rates and things like that. But cap rates just started, and other metrics started decreasing as home prices started increasing. And so the actual returns weren't as great when you compare it to short-term rental. So we actually get a good amount of those types of folks. And then there's a minority amount, and we expect that minority to start to grow, but a minority amount of people out there that have built portfolios, like my sister and other people we've worked with, who have a lot of experience doing this, and they're looking to expand their STR portfolio.
Got it. That actually aligns pretty well with the answers we're getting on the poll. So we have about 62 people right now live, and about 39 responses, and 62% are just starting to research, so like early on in the process, and then only about 13% under contract, right, actually executing a strategy. So does that align pretty well with what you're saying?
Yeah. I mean, and it's going to be really interesting because I think it's going to evolve. We're going to see more people switching from long-term rental, getting into short-term rental, but then there's going to be other folks that are going to be really interested in owning a property in an area that they want to go visit, but can't necessarily justify owning a second home. This is one of those types of ways to be able to do that, make some income and have some fun while doing it.
Gotcha. Makes sense. I want to get a little bit into how you vet out a property, but before we do that, let's talk a little bit about the trends that you're seeing. So we talked already about what happened during the pandemic, how property price increases drove other metrics down. What are you seeing going forward? 2023 and maybe even the year after. I know there's a lot of variables right now.
A lot of variables. Yeah, lots happening. I'm one of those folks that has a background in tech. I invested heavily in tech and also, dabbled in crypto, and just today, wild stuff's happening. But one thing we've seen in terms of just investments in general, real estate has been very resilient through dips and just coming back. And we expect that to continue to happen. I think things are a lot more challenging as there's uncertainty in the market. But the way we've all viewed it is there's just a lot of opportunity, and the opportunity is only going to get better as markets or as prices start to adjust to something that's reasonable. And so, when we think about 2023 compared to the past, I think it's important to understand the story, especially in the context of short-term rental. I should just talk a little bit more about this for people that don't really understand what happened during COVID. But at the very beginning of COVID, I remember this very clearly because that's how Awning first started. I mean, we were exploring things like multifamily and commercial real estate and creating some different marketplaces around that right at the very beginning of 2020. And then suddenly COVID hit, and we were based in San Francisco. And if people didn't really know this, San Francisco was one of the first cities and areas to really shut down. And so, at least for us at Awning and the rest of the market, we saw basically everyone freeze. No one froze. Everyone, no one really knew what to do. And that's what happened with STRs. Like I know that the markets and the folks that we know that own short-term rentals during the early days of COVID, it was very, very scary. Like they had zero bookings, and they didn't have the safety net of long-term rental. But it wasn't until after a few months or so we started understanding COVID a little bit more. The shelter in place, the expectation to work from home started, really becoming the norm. And that's when people started thinking a little bit more about, all right, what can we do to just make our lives a little bit happier, a little bit better? I mean, we saw the rise of Peloton and Zoom, but that's where we started to see the rise of short-term rental continue to happen. From a statistics standpoint, I think occupancy went from basically increased about 50 to 70% some months after COVID hit. But then on top of that, revenue actually increased significantly for short-term rentals, over 100% in a number of areas, but also in drive to destination areas. That's where we saw revenue, more than double. What we expect, at least for 2023, I wish I could predict the future, but taking data, it's important to understand a few things. With inflation and expectations that the economy will be forced to soften, we do expect some flattening to occur in certain markets. But we aren't projecting any massive drops. With exception, there's probably a few different markets out there that potentially may have gotten a little oversaturated. Or the other thing that I think is going to be a little lesson learned that we're going to talk more about is markets that have become more restrictive around STR. But if we kind of take some of those out and we think about the broader opportunity, the important thing to know is that the work from home trend is going to continue to grow. So I think one thing, and again, I'm not an economist, but we pay very close attention to other economists and other forecasters. And one interesting thing that we've been watching very closely is the airline industry, and then also Airbnb, the company, and their earnings and their reports. Two interesting things have come out very recently. American Airlines, Delta, etc. As we've seen tech stocks and everything else, come back down to earth, we've actually seen. Oh gosh, I'm about to say a pun or something about airline stocks going in the sky. But basically, we've seen airlines. I want you to say something there, Jonathan. But basically, we've seen airlines earnings, blow expectations out the water, and continuing to forecast that there's an increased demand for travel. And the biggest reason is because of work from home. COVID's the one that started this whole thing, and it's going to continue. I don't know how many folks on this call are given the opportunity to work from home, but the vast majority of the people that we are able to communicate with and spend time with, there's a lot that are able to work from home and continue to work from home. And because of that, it's changed the way people, one, travel, but also book stays at different places. So back in the days, if you had a typical 8 to 5 type of job and you were expected to be there Monday through Friday with limited vacation time, it was very hard to justify driving 3 hours somewhere or jumping on a plane. Today, we've heard more about this trend of change your background, get some work done, but do it on the beach and do it in a different area where different friends and family are around. Get your work done, but in the evenings or the mornings, spend some time with others. And so we're going to continue to see that trend. The airline's already saying it. Airbnb had the best quarter in the history of the company, again, while other companies were reporting one of their worst. And so we do expect it to continue to trend well, with the exception of some outliers in some other areas from there.
Got it. That makes sense. So we're getting a lot of questions from the audience that align with what I was going to ask you next, which is, okay, how do you go about, if I were to bundle all these questions into one, is how do you go about analyzing a short-term rental property and figuring out what market to enter? Just wondering if you can share a little bit of insight into that. I know you have some tools that you use to do analysis.
Yeah. Why don't I just kind of showcase a little bit of how I do it? But let me just talk first while I'm getting some of this set up. Here, I'm going to go ahead and present and share my screen. Is that okay, Jonathan? Am I able to do that? Okay. Let's see. I do a window. Let's go over here. Okay. I have some little tabs just in case things don't necessarily work out, but hopefully they will. One of the things a lot of folks like to do is choose a path. Okay. And so one of those paths in making a decision of finding a property and then analyzing that type of property is, where do we want to be? I'd say, the path, the two paths we hear the most kind of fit a little bit along the lines of the two different segments, the more experienced investor versus the less experienced investor. It's not to say one's better than the other. It's just those are the segments that I think this group falls into. So let's think about what's most common. If you're a little bit less experienced, what most resonates with somebody who's going to go put a big chunk of money down and go buy another property is they want to hear a story. You want to hear more about the property itself, but how does that property fit into the broader story of the location and the market? And what type of effort and what are your goals that you want to put in place around that? And so in some cases, people's first property, they're a little bit afraid to go purchase a property that isn't close to them. They want to be a little bit closer to the property, potentially a little more hands-on. Some may want to manage it. Some may not want to manage it, but still be able to go see it and be a part of it. So that often dictates the path and the location. And you typically, if you're living in a certain area, you're going to buy in that certain area, that certain area. So that's kind of one aspect. The other aspect is there are investors out there, some that are more experienced, some that are more comfortable owning remote properties. Those types of folks will basically, one, want a good understanding of a story, because from a short-term rental perspective, it's more than just macroeconomic type of indications that real estate's going to be resilient in a certain area. They want to know, how am I going to stand out amongst my other options? Is this going to be a marketable type of location relative to the demand and the supply in those types of areas? And then also, what is something about this type of property that I would really enjoy about it, and be able to have that empathy with the person that's going to be leasing that. So there's a lot of overlap, but I think the biggest difference is being open to markets you're not familiar with, and trusting data and individuals who have experience in those areas versus markets that you're really familiar with. And so you got to decide one of those paths. What I want to do right now is just kind of showcase how I look for properties. If you're working with Awning and our client advisors, a lot of us have maybe our own styles, but at the end of the day, we share a lot of the same philosophy. So, I'm just going to use my own website because this is our company. It's awning.com. You can use Zillow, you can use Redfin, you can use whatever. I like Awning, of course, because it's their own company, but we are optimized around real estate investments. And so let me just show you a little bit about this. There's a couple of different paths, at least with our product and program. You can go to search and you can search the various markets we're in. One thing to call out, and in case there's some questions, Awning is in 7 different markets to be able to purchase. And when I say markets, I'm talking states. So I guess the actual thing is we're in multiple markets within each state, but we're in 7 different states. So there's some limitation around that for the ability to purchase properties. But we also do short-term rental property management across all 50 states. So rather than, you got a couple of options here. We can go just kind of search more broadly. But I'm going to use a little bit of a tool that we have called Top Deals. And I'm going to click on that. And then I'm going to click on See Vacation Rentals. And again, I know this is not an Awning commercial. You can do this with Zillow. But pull back and start to see all the different types of opportunities. In this case, we give you the ability to see properties that we've vetted, properties that we're essentially recommending. You can also look at different searches and create your own parameters, but this is just a little bit of a shortcut. Jonathan, I think we talked about 65% or sort of is it 65% or more of newer at the short-term rental space? Is that right? At least for today's audience, somewhere around there. Okay, so we're leaning more towards that. One thing that we find as a higher correlation is if you're fairly new to purchasing a property or looking for a property, you don't want to go spend millions of dollars on those properties, regardless if you have the money to be able to do that. And so one thing we like to do is just use price and use that as kind of the first thing. So you might be able to put like $350,000 and putting that as a max, and then start to see, you know, what's starting to come up. So we got some different areas. For me personally, I know Texas extremely well and a number of markets in. I know California extremely well, especially Northern California, because I've lived there. Those are areas we can dig into. But one thing we get a lot of folks really interested in is Florida. People really like Florida because, one, they vacation there. Two, there's a lot of destinations, a lot of places that basically drives a lot of tourism, but it also drives a lot of short-term rentals because of conventions. And one interesting fact that a lot of people don't really realize is there's a lot of short-term rentals that are being occupied in the winter months because of snowbirds. And these are essentially people that want to move away from the north and the northeast, the freezing temperatures and the snow, and be in a place. So that's what makes it nice. At least using this, if we start with price, we can start to look at, you know, the different types of properties that fit within that price. There is a metric called a cap rate. It's essentially the net operating income over the property price. And so that's a common type of metric that we like to talk a lot about. I think a lot of people don't even really use the term cap rate, but they're all the back of the envelope math that they're doing basically is that calculation. And so just a little quick cap rate 101. You want to build in all of your typical expenses. That includes taxes, insurance, even property management. You want to build that into it, but we're going to exclude mortgage and all of that. That can be just so different, and that's more in like a yield, like an IRR type of calculation. But let's make things really simple and focus on the most popular metric, which is cap rate. One type of, well, basically cap rates, the higher the better. Question we always get is, what's a great cap rate to look for? In the long-term rental space, so these are annual types of contracts, a solid cap rate in a not so competitive market is around 5%. In a very competitive market, which we saw over the past year and a half or so, it started actually being the 4% type of range. But if you're hovering around there for a long-term rental, that's a good number to be at. When we think about short-term rental, I think I mentioned at the very beginning that there's some stuff that's intimidating with short-term rental. There's some fun things, but there's some complicated things associated with it. Some of those complicated things involve the need to be able to furnish that property. In certain months, there may be seasonality and you might not have as much demand. The predictability around it or the effort around it may be a little bit looser than a long-term rental. But what we're expecting out of that is, higher risk or higher effort. We're expecting higher reward. So what we typically like to talk about is, start it at a minimum of about a 6 cap. And that's comparing in today's market where a lot of these long-term rentals might be in the 4 cap and some of the better cap rate and some of the better type of markets. You can absolutely find higher cap rates in some different markets for long-term rental. But again, it's a higher risk, higher reward. So we'd like to set the kind of the bottom at around a 6 cap. But one thing we like to talk a lot about is if there's a really great property out there that we can use data and technology to surface, there might be ways to be able to squeeze a higher cap rate out of that, which is basically higher income or lower cost. So, if something's around a 7 cap, 6 cap, let's put it this way. A 6 cap is worth looking at for a short-term rental, in our opinion. A 7 cap, that's kind of flashing lights of like, hey, this is something you might consider buying. And then anything above that, you consider buying it, but you start to challenge yourself of like, why is that the way it is right now? So let's look at the C homes under a 7 cap. Okay, it actually wiped out a few just using sort of our recommendations, and we're left with these 2 properties. I'm going to go and click on this one. It's in Melbourne, Florida. So I know a little bit about some different aspects of Florida. This is close to Cape Canaveral. There's a lot of good demand around here because it's got a beach type of community and feel around it. It's a $325,000 property. One thing I really like about this property is that it's a 4-bedroom, 3-bath, and almost 2,000 square feet. So it's got some pretty good bang for its buck. Obviously, you can look at some of the pictures. We can do that just really quickly. Looks like it's got some nice bare bones associated with that look pretty good. And I think one of the bigger things when you're looking at pictures, you just want to make sure it's not like some burned down type of house or there's just something funky about it or it doesn't have great pictures. So you want to look at that. With this property, we're estimating about a 7.8% cap rate with a 20% year over year return averaged out over 10 years. And all of these types of properties, when you're doing this analysis, one of the biggest things I recommend is play around with the numbers. Play around with what does it look like if you had lower revenue associated with that. Okay, so looking at this property, at least with Awning, we have a couple of notes. If you're working with your own agent, your own realtor, these are things that you'll want to have them share with you a little bit about, or you on your own. You're going to want to build in furnishing. And so you want to build a furnishing budget associated with this. It's going to be different from market to market. It's important to work with a local or experts who can help do some of this design and furnishing. Or if you're going to do it yourself, try to understand the budget. People ask us, what's a typical budget for furniture? Across the country, it's somewhere about 25 to 35K or so. We've seen some deck out and do design and furnishing in the 50s, the 60Ks for some really great places. We've also seen it work out and be okay for some smaller places in the 15 to 20K range. But for this one, we're recommending about $33,000 for furnishing and design, $5,000 for renovation costs. And then just, a couple of extra notes that are in here, the highlights. The property is 5-minute drive from downtown Melbourne. So you're developing a story and a thesis around this. 10-minute drive from Melbourne Beach, 13-minute drive to Paradise Beach. We've found that depending on the market, there's sort of a threshold when it comes to driving distance to a really great destination. In this case, the destination is the beach. If it's under 20 minutes or so, that's typically sort of the threshold, and the closer to the beach, the better. So this case, it's about 13 minutes to Paradise Beach. What else does it say? This home is not part of an HOA, so that's an important thing, and it's not located in a flood zone. That's good. And then a couple of other notes. Melbourne SCR regulations vary and can be limited to a minimum of weekly rentals. Check with your client advisor for more details. This is a really important thing to also double check. Can you actually do short-term rentals in this area? I ended up moving back to Dallas-Fort Worth, and I have a property that I wanted to convert to a short-term rental in Fort Worth, and I just assumed you could do that, but no, you have to look into it. We found out, it's not possible to be able to do that. But going back to all of this, you want to look at some of your different numbers. You want to look at some of the costs associated with that. Customizing it, you can always play with the numbers. What if I was able to get this? What if this was ultra competitive and it went for $25,000 more? Let's start to look at the numbers associated with that. But in a less competitive type of environment, what would it look like if it was just like a little bit less? And you'll start to see things rise. The monthly revenue associated with this, the way this is working right now, it's just averaging out per month. So the expectation here is $60,000 in an annual. We're going to want to check some of those numbers. So one way to do that is Awning happens to have our own estimator tool just kind of built in. And you can visit and find this through awning.com. It's actually completely free. There's other great products out there. AirDNA has it. It costs more. That's another company that you could check out. But what we've created here, at least with Awning, is a way to be able to see what the comps are in the areas. And so I think people are pretty familiar with comps. One thing we always want to do is if we look at this tool, let's go find the exact property. Where is it? I see it right here with the little house. And you want to get in as close as possible. One little tip is, I see there's some of these properties on the side, but it's kind of its own unique location over here. It's kind of on its own island, so we're not going to comp that necessarily. What we want to do is start to like dig in a little bit more, see what are some of these properties. There are certain situations where there's not enough data for a given type of property. So you might see some zeros on there. Maybe it's a brand new property. Maybe something funky's going on where they turned off the listing. So you sometimes can take out some of those types of properties and then dig a little bit deeper into very specific properties. So in this example, here's a property over here. It's 5,472 on average. You can look at some of the amenities. Is this a pretty comparable type of property? And always being able to dig into that. You can even look at some of the historical performance associated with this. You see the historical, it's got some pretty good occupancy rates. And then you see some of the averages. In this case, you're like, all right, that's a pretty good comp associated with that. In other cases, you'll see some other comps and you're like, whoa, that's a lot lower. What's up with that? You can start to compare the amenities. You start to see there are some differences associated with that. You look at the historical rates and you're like, hold on, there's something a little bit funky going on with this. Why are these a little bit lower? And it's something to dig into, but it's also one of those things where you're looking at it and you're like, is this truly a comparable type of property? You know, here's another property that's in the $12,000 range. Let's just poke into that really quick. I believe I looked at this property to save some time. I won't go into too much detail about it, but it is a pretty nice property. It doesn't have a lot of comps associated with it. Looks like it actually wasn't rented out for a good portion of the year. You'll sometimes see this in comps. Some people are using it completely for themselves on their own. And in this type of situation, we're seeing that's likely the story. You know, it goes from 0% to 100%, and then 0% to 66%, and 91%. We saw something choppy that was like 25 to 40% kind of across the board. That'd be like, let's dig deeper and understand what's going on here. But in this type of case, you might consider this a little bit of an outlier situation, maybe not. But one of the most important things to do is to find a property that's most like it. The fact that this property is close to the water, it is a better type of property. And so let's look at the numbers that Awning is projecting.
Yes. With those zeros that you're seeing there, so first of all, thank you for holding down the fort because my computer crashed and you just kept going, so I appreciate that. But all those zeros, do you find that sometimes that could also be due to gaps in the data? Like maybe, Airbnb not sharing data or...
Yeah, there are sometimes gaps in the data associated with that. There's sometimes stories that just fit within it. So I already mentioned there's a number of people that love owning an STR because they have the flexibility to turn it on and turn it off. Sometimes they're like, you know what? We're going to take the summer and use that property, or during a low period in a low season, we're not going to make as much, so why not have some fun and use that or share it with some of my friends? So that's one reason for the gap that I mentioned before. A second reason, sometimes it's data. There are times that it may be listed on Vrbo or Airbnb, and there's lots of different ways to do that. But there's other sites as well that may have some kind of negotiated situation built into that. And so you'll see some of that end up happening. But there are other situations that there could be a gap in the data. And in those cases, you just want to keep looking for, more around the story and understand that and see what other comps are out there.
Got it. I want to try to layer in some of these questions that we've been getting. And I see some of them are getting upvotes. And some of them have multiple questions in them. So I'm going to try to combine them. So I think the first one says, with the recession brewing, I think we're already in a recession, but is this a good time to get into the STR industry? I think we talked about that a little bit already. It seems like the expectation is that it'll continue to grow, but I don't think there's really a scientific way to to say for sure, right? Is that a first statement?
Yeah, there are some people that let's just talk about some different opinions. There are some people that are basically saying, STR had its peak, and if you compare it to the peak and expect for it to peak even higher over the next year to 2 years beyond all the factors that COVID started, I think that's going to be challenged pretty hard as people's basically disposable income starts to be adjusted a little bit as rates adjust. The other thing we start to see is the mortgage rates, and I know Beeline's got some kind of amazing ways to be able to get the rate a little bit lower, but as we know, mortgage rates have essentially doubled over the past, I don't know, within the past year or so. And that's making things more challenging to be able to cash flow if you were to purchase today. But with that being said, we are actually seeing kind of two trains of thoughts. One of them, it's believing in the thesis of short-term rental continuing to be a great opportunity to get properties that are trophy assets in areas that typically would have essentially lower demand, lower supply. You're able to get into some of those markets because you're underwriting those and evaluating those not as a short term, but not as a long term, but as a short term. Am I still sharing my screen? Yeah. So let's just kind of look at this one really quickly. 5-cap's still great. If we look at this from a traditional rental standpoint, $2,500, purchase price $310,000. But when you look at it from a vacation rental standpoint, you see it goes up significantly. It's like 70% higher. So when you think about that, you could essentially justify being able to purchase a little bit more. And so you can be more competitive with the properties themselves, and you'll be able to win more, basically. The other thing to add to this is there is this other mindset that mortgage rates will not continue to be as high as it is. Sure, it may be go up. Sure, it may go down a little bit and not completely drop. But the expectation is if you're going to hold this for long term, 30 years, but not even 30, 15 years, 10 years, there's a lot of different ways to think about where mortgage rates can go. And one of the thoughts is you can always refinance at some point. And maybe it doesn't drop to under 3% like it did in the next 10 years or so. But there is a lot of belief that it will drop pretty significantly some years from now. So if you start to build that into some of the calculation, you can do that. And so if you look at even like the vacation rental standpoint over here, you look at the customization, sure, let's build in 7% or so, or 7.5, and we'll start to see cash flows affected. But what happens if you're able to refinance, and let's build some weighted average into all of this and get it down into the fives at one point? You'll start to average out some of this type of cash flow. So but I think the bigger thing to think about is with less competition out there is going to be more ability to purchase at the prices that you want to target. And there's going to be potential to purchase under listing, under asking as well. So lots of different opportunity.
Gotcha, that makes sense. Another question that came in, what do you do about the STR restrictions? So I know this on the page you mentioned, or it lists that the restrictions or the regulations may vary based on the city. What thoughts do you have around restrictions and how that affects investing, and I guess how that's going to affect also investing in the future?
I could go ahead. I'll go ahead and stop sharing. I could always pull up more examples as needed. So there are a couple of things related to restrictions. To be honest, it's not very cut and dry. It does take working either with an expert, a local agent, an awning type of expert, or doing a lot of your own research associated with it. And one bit of advice we always like to share, and this is kind of counterintuitive, but we actually like markets that have restrictions We like markets that have something in place, not restrictions of saying you can't do STR, but have certain types of restrictions that say, there's a certain number of permits, or there's a certain fee associated with this and a process you have to go through. And if you know this and you understand it, that's something we can predict and we can build into it. The ones that have more of like a gray area associated with it, where it's saying, well, in certain circumstances it is this, but we haven't there hasn't been a strong opinion from a city council about a certain type of situation. Those actually scare us. They scare us because, like, what happens when you build all of the metrics into this, and one day it ends up shifting over, some votes. In those types of situations, it's more likely of that happening versus a market that already has restrictions in place, that has already gotten through and negotiated with locals, STR owners, all of those folks. So that's one thing I think to dig into. So I guess to summarize, work with an expert or do a lot of your own research, and be able to source, have some really great sources. And then also go to places that have things a little bit more formalized, if not a lot more formalized when it comes to regulation.
Yeah, it actually makes a lot of sense. Where I live in Hollywood, they have some pretty weird rules. It's not just how strict they are, but also how, like, they require a landline telephone, which sounds weird.
Yeah.
But that almost becomes a checklist for buying any property, even if you're not doing a short-term rental, because a lot of it is around safety. So now you have a checklist for safety items in the house. So that makes perfect sense. Sorry, another question is how many listings is too saturated when you look at cities or different markets?
Saturation is all relative to demand. And so saturation, just if you think about it, it's just like too much, which basically there's more supply than there is demand. The important thing to start to look at is occupancy rates and what's that's looking like across the market. And so the example that I shared with you, they had some pretty solid occupancy rates. There weren't a ton of comps, like, thousands and thousands within that one area. But if we did see something where it was a mix of, and let's put some more qualitative lens to this, we can definitely get into the quantitative side. But from the qualitative side is, if you're doing one of these searches and you're looking at one of these properties and you see a bunch of properties all in those areas, start to dig into those properties and look at the occupancy rates associated with that. And if you see some trends where occupancy is going down, but you see more properties popping up, that's one of those things that basically is an indicator that you need to dig a little bit deeper. So I wouldn't say that it's a pure, like, kind of number and ratio. It's really coming down to the demand associated with that. But that's the best thing to look at is look at some of the data, look to see how many properties are being converted, and then most importantly, keep a good track of occupancy rates, not just historical, but also the very recent, few months also, when you compare it year over year.
Yeah, so that makes sense. Another question that came in is, for a beginner, would you recommend starting with multiple smaller, like 1 to 2 bedroom properties, or less properties but larger, like 3 or 4 bedrooms?
Man, I will say it depends. But if you were to kind of, ask Awning's opinion and my own kind of personal preference, I've seen a lot more success, and we've seen a lot more success with the larger properties. So we're thinking more of like 3-bedroom, 4-bedroom types of properties, because the challenge we're dealing with right now, and you're going to hear more and more about this in the news, but it's this kind of PR issue with folks in the short-term rental space, which is basically squeezing out as much profit as possible. You might have heard about the TikToks where they're asking people to do like a bunch of laundry and a bunch of kind of cleaning and things like that. And so there's starting to be some backlash. Along with that, you're also starting to see more pushback on all these additional fees. Airbnb's already changing the algorithm, and it's going to show total fees. And the reason why I'm bringing that up is The challenge you start to have is this a better deal or is this a better value than a hotel? Forever, hotels are just so expensive and they continue to be expensive. But what we're starting to see is Airbnb prices go up. So the way you differentiate yourself from a hotel, like a 1 bedroom, 2 bedroom, which they have 1 bedroom, 2 bedrooms, suites and things like that at hotels. The way to really differentiate yourself is have more bedrooms. And so that's one aspect. The other part is it just brings more optionality into everything. You can always reduce prices if you need to be able to hit certain price points, which people are always open to. But the other thing around this is, you can't typically like add bedrooms, to your property. And so if you get to a higher bedroom count, it gives a lot more optionality. It can, you can lower the price and you can attract a couple into a 4 bedroom and then they, have some good times there. The other thing you do is you attract the families or you attract the groups that want to have a destination party or something like that. And so if you have more optionality and can stick out more than the status quo of hotels or even other properties that are STR properties that are 2 bedrooms, you just kind of have more long-term potential, but also safety. So that's what we typically recommend. But we also know budgets and desirability are factors that could influence it the other way.
That makes sense. I mean, it sounds like it starts with knowing who your target market is, right? Who do you want to serve, right?
Yeah.
And then working backwards from there. Makes sense. Another question that came in is, what are some rules of thumb to determine finishing costs for short-term rentals? And I actually had a question about that, but I'll let you answer that one first, and then I'll chime in with mine.
Yeah. So if you're a noob and just getting into real estate and this is your first property, long-term rental or short-term rental, you're always going to have to build in some kind of make-ready cost, even if the property is looking pristine. You might need to do something, change locks, do something kind of unique. So we always like to build a little bit of buffer, regardless. So maybe like $5,000. It sounds like a lot, but to others it might not sound as much. But it's a nice buffer to build in there to just say you're going to need that to just get this fixed and get this worthy of a long-term rental. Then you start to build in the other pieces, which primarily is really around making it marketable, but also livable for a short-term rental. And I already mentioned a little bit about this before, but I'll just say it again. There's the design aspect and furnishing aspect. From the DIY standpoint, you can definitely shave some stuff off, but we have seen a lot of DIY using your old furniture, buying some IKEA stuff, things like that, kind of just be a bigger hassle and just taking longer. What you want to do is try to get this thing, get your property, up to the best standards as fast as you can. And typically that pays for itself. So if you are to use a company or if you're going to try to do this yourself, we kind of see the furnishing and design costs somewhere between that 25 to 35K type of range. One thing that's typically awesome is if you buy in a short-term rental type of market, there are sometimes opportunities where it's already furnished. And that's just kind of a great thing to be able to get because, it's just built into the price. And if it appraises then you just kind of get that built into your mortgage. But in other cases, you do need to plan a budget for it or figure out a way to take a line of credit out to be able to cover some of those costs.
Gotcha. Makes sense. Yeah, I furnished a short-term rental doing it the thrifty way, and it takes a lot of effort. Even knowing the right people to call, it takes a lot of time.
One additional thing I forgot to mention, we always get all these questions about property management. You can absolutely manage it yourself. It's a lot harder when it's short-term rental. I think, as you know, Jonathan and others, but if you're there, you're on site and you've got a passion for it, then by all means do it. If you were to go use a property manager, you do want to build in some of those costs and get that all figured out. So a lot of the costs will typically be a lot more than long-term rental, but you expect to recoup it in more fees, anywhere from 15 to upwards to 30% Awning, we have a special way of doing things that leverages technology and data to streamline things. So we can do things at about the 15% range, sometimes a little bit higher depending on the property. But that's another important factor to build into your metrics and your costs.
Cool. That makes sense. We are well past our time now, so I got to ask you if you got 5 more minutes. If not, I got like 5 questions we're gonna have to answer via email.
Okay. Yeah, I've got time.
Got 5. All right. Let's see if we can get through this very quickly. So the first one is, what are the biggest beginner mistakes with short-term rentals? And I don't know if you want to talk about like maybe like you've seen like the top 3.
I think one of them is the regulation piece. That's a really big one. People just assume that you can do it. I was dumb. I just assumed you could do it in Fort Worth. I was like, there's hardly any regulation out here. Why wouldn't you be able to do it? And then, I leveraged my own awning resources, and the team's telling me, no, you can't do it out here. And I was from the area some time ago. So that's one important thing. Like, run the numbers. Don't just assume because there's some gray area, some looseness around it, that it's going to be great, a few years from now. So that's one important thing. I think running the numbers and building some buffer is just something you should always do. Like historical trends don't always predict the future. So try to build in some sensitivity analysis where what do the number looks like at last year's kind of, projections? What do the numbers look like if you were to discount that down 10%? What do the numbers look like if you discount that 20%? And if it still works out to something you're happy with or can live with, if it is lower and not have any regrets, then that's a good buy. And then the last one is penny wise, pound foolish. I learned this the hard way in a lot of different areas. Through my years, I started realizing it invest a little bit more upfront. In the case from the short-term rental standpoint, invest in better quality furniture that can last longer. And if you can, bring in somebody with a design eye that can make things pop a little bit more. So I think those are kind of the bigger examples.
Gotcha. No, that makes sense. We spoke about this a little bit during the prep call about the theme properties. Which the question we got is, could you speak to the choice between going for a unique, fantastic property in less of a destination area, right? So basically, the property being the draw for the guest versus being in a hot destination area with a more generic property.
One thing that we've seen more and more of is if you go to Airbnb here, I'll just do one quick screen share. Is this it? Let's see. Okay, if I just, I'm just going to type in airbnb.com. I'm just going to go here. Okay, so if you just look at Airbnb, one of their philosophies and just goals in general is to make this more of a lifestyle type of driven site versus just like hotels and things like that. So if you look at this, you'll start to see that themes is what Airbnb is focused on. I guess we're on the OMG, oh my gosh, type of properties. And these are like really cool, unique ones. I think this is actually becoming more and more popular and more trendy. I don't even know what this is, some dragon property or something, but they are really, really cool. And sometimes you're looking for more than just the destination. You're looking for just a really great place, because a lot of things we're hearing more and more about is people are wanting to spend more time with their families or more time with their friends. And they have the ability to do that now with the work from home type of situation. And so because of that, if they need to work from home for 3 of those, 5 days or something like that, they would prefer to do it in a really kind of cool place. And when I talk about a place, a property. The other thing that we're seeing a lot more is in areas that happen to be just like great destinations. What's a good example? Like Kissimmee or Orlando, Florida, where Disney World is. The more popular places that have a lot of short-term rentals, you'll start to see the properties that are somewhat more successful, they stand out amongst the other properties, you know, on those blocks or within a few streets down the road or so, because they're Disney themed or just look a lot more fun. And so if you're trying to choose between the two and you're going to go make the effort to go fly somewhere, sometimes a guest would be willing to pay a little bit more to have a more fun experience for their kids in a Disney themed room or something like that. So, you know, we'll continue to see how this trends, but that's what we've seen with our own data and our own experience.
Gotcha. It's kind of going back to knowing your market, like who your target market is, and also the actual geographical market that you're going to be in.
Yeah.
Makes sense. Cool. We got a couple of questions that fall into more like tax planning and investment planning. So I'm sorry, I'm going to have to skip those because I cannot offer you investment advice. And then we did have a question specific to the Temple, Belton, Texas market. Miller, I'm gonna introduce you directly to someone at Awning that can help you with that. I think that'll be the best bet. That's okay with Dennis. And then I think we cover everything. So this has been awesome.
Thank you, Jonathan. I realized I was a little long-winded. I think I'm just passionate about this, and I got so much data in my head that I want to spew out and spit out to everybody. And but yeah, I appreciate letting me go over a little bit more.
Yeah, no, for sure. So for everybody still on the top right, there is a link to go to the awning.com website directly. So you can click that and go to Awning if you want to reach out to Awning directly. If you have any deals that you're working on, you can go to go.makeabeeline.com/question or reach out to hello@makeabeeline.com or just go to our website. Dennis, thank you so much for your time. I hope everyone got as much value out of it as I did, because I know I learned a lot. And I think we might need to do like a follow-up to this because we have so much work to cover. So thank you so much for your time.
All right. Thanks so much, Jonathan. Thanks for everybody that joined. Really appreciate it.
Thank you, everyone.